We're already seeing it in many places, but even in the broader based indices, and the Fed will have to adjust, and we'll be on the other side of the horror show we just went in.
Cathie Wood, the CEO of ARK Invest, recently provided a 2023 market update and shared her insights on the economic outlook for the remaining months of the year. In her update, Wood highlighted a significant increase in interest rates over the past year, which has sent shockwaves through the financial system. Despite this, she expressed her belief that the Federal Reserve is not adequately acknowledging the strain this places on the banking system. Wood also mentioned her concerns about an impending government shutdown that she anticipates will trigger a significant event. She went on to discuss the Fed's plan to further raise interest rates, which she considers a significant mistake. She drew parallels between this move and the early 1920s when such actions contributed to the onset of the Great Depression. Increased interest rates would result in higher borrowing costs, potentially pushing the economy into an unnecessary and severe recession, in Wood's opinion. Furthermore, Wood delved into the impact of the Fed's actions on the stock market and ARK's share price, noting that the Fed has raised rates a record 21 times over the past 2 years. To gain further insights into her outlook for 2023, as well as her views on inflation, the stock market, and ARK's investment strategy for the upcoming months, we recommend watching Cathie Wood's latest interview.
I think they should put into context what has happened in the last 2 years. Interest rates, the Fed jacked interest rates up 21-fold. Any long duration asset, and in the world of equities, innovation is going to be the longest duration. All long duration assets were slaughtered last year. The bond market, now that's long duration as well, but it's usually a flight to safety vehicle. The bond market last year had its worst year since sometime in the 1700s. If that was going to happen to bonds, which are usually flight to safety, just because they were long duration, that was going to happen to ARK in spades, and it did. Now, where are we? The market is starting to look to the other side of the interest rate increase, and they're starting to look at inflation, which is crumbling. Inflation is crumbling. I know that a lot of people use the word sticky, but you look at the leading indicators of inflation, they are coming down rapidly. And we do believe we're going to see deflation. We're already seeing it in many places, but even in the broader based indices, and the Fed will have to adjust, and we'll be on the other side of the horror show we just went through. I don't think we've been wrong about it. When we were in COVID, we were talking about inventory shortages that would cause supply chain problems and the inflation that would come from that. But I think when history is the judge, and it will be, history will judge the inflation we went through as the result of a massive supply shock to the system. And they will look at the comparison, not to the 70s, which I know Larry Summers and Mohammed El-Arian and others have used that analogy. We were on the gold standard, so money supply had to fall as inflation went up. Inflation went to 24% June of 1920, dropped to minus 15 in June of 1921, and we moved into the roaring 20s. Why? Massive innovation, telephone, electricity, automobile. This period is much more like that period than like the 70s. And again, history is the judge. It will look at the inflation chart, which went like this and is going like this now. And it will seem like it happened in a flash, even though going through it feels like we're in slow motion. So we started our research on artificial intelligence, actually when we were studying the possibility of autonomous vehicles way back in 2014. NVIDIA at the time was $5. That's on the split basis, $5. Now it's closing in on $450. So we rode it all the way up until mid to high 300s in the flagship. Sold it because we saw the inventory problem brewing. That was a good call. Got back in the fourth quarter when it cratered. And then it just took off after ChatGPT, while all of our other stocks, many of them AI driven, I would say most of them actually, were still very, very weak. And just to give you an example, NVIDIA was at 25 times revenues, while Twilio, which we think is going to be a huge beneficiary of AI, was it 2 times revenue? So we were making a valuation judgment call. We had done very well, 5 to 350 to 400. And we also kept it in our more narrowly focused portfolios, but took profits there as well. I think a lot of people understand that NVIDIA is just an incredible play on AI, and it is priced accordingly. Who are going to be the winners in AI? It is going to be companies with visionary managements, good distribution, global in this case, and proprietary data. And we think the secret sauce and the real beneficiaries of AI are going to be those with proprietary data. The biggest one being Tesla. More data on real world driving miles than all the other auto companies and tech companies focused on autonomous in the world.
Despite a slight relaxation in price pressures observed last month, officials are exercising caution when it comes to prematurely declaring an end to their efforts to combat persistent inflation. The central bank's primary goal is to avoid repeating the mistake made in the 1970s when an early easing of inflation control led to a resurgence of double-digit price increases. The Federal Reserve Bank of San Francisco stressed that it is still too early to claim victory over inflation. These expectations have driven both stock and bond prices higher, reflecting the market's confidence in the Fed's intentions. In related news, ARK Invest took advantage of the recent record rally in Coinbase global stock by selling nearly 500,000 shares, valued at just over $50 million. Although the cryptocurrency exchange remains among their top holdings, the second half of 2023 is expected to be intriguing as we approach the Bitcoin halving in March 2024. Cathie would also acknowledge the movement in crypto legislation in the House, which signifies the growing interest in the crypto space. While crypto legislation may encounter challenges due to opposition from certain figures, she believes that the mere conversation will benefit the crypto market, potentially leading to growth opportunities. Additionally, she touched on the current monetary policy, with Chairman Powell referring to it as restrictive, raising concerns about inflation rates. The potential rise in real interest rates could impact investment decisions, making investments in alternative assets like Bitcoin and other cryptocurrencies more appealing due to their resistance to inflation. What are your thoughts on the latest interview with Cathie Wood and her insights on government debt, rapid economic growth, and the ever-evolving cryptocurrency landscape? Feel free to share your comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.